As promised before the break, then let's go across to my colleague Poonam, who joins us with a quick roundup of the trade data, the balance between exports and imports, and it didn't look quite good as imports surged and exports slowed down, widening the trade deficit. Poonam, take us through the internals there.
Watch out for the rupee as well in trade. We did see the rupee hitting a 2-week high on an intraday basis. In fact, post the trade deficit, which has come in significantly higher at $16.3 billion odd dollars. This is an over 4-year high coming in for the trade deficit. I guess we may see some amount of pressure coming in on the rupee. In fact, look at the exports data. It has slowed down. The export growth is just about 9%. So there is slower growth in terms of the exports, although the absolute exports does remain pretty much higher. The imports have, the import growth of course remains fairly strong, up nearly around 26% and led by of course oil imports, which has grown nearly 43% but the non-oil imports also have grown to 20% and that is on account one of the good factor is that we're seeing the lower gold imports during this month at $1.6 billion versus $3.4 billion. We're also seeing the electronic goods import improving by nearly around 12%. Some amount of finer other details is that engineering good exports remain strong at 16%. So that gives us some sign that maybe we are seeing that some amount of respite in terms of certain segments of the export, but broadly the export growth is relatively slower and hence we really need to be watchful of that. But as of now, a higher trade deficit may lead to some amount of pressure in terms of the rupee.